us today from the Berwyn Group to share these insights. Justin Bierkes, General Manager of Financial Services, and John Bikes, President. So I'm going to hand it over to John to get us going.
Great. Thank you, Linda. And thanks to everyone who's attending. Appreciate the time. Hopefully this is an entertaining and informative session. Before we jump in to the content, probably be helpful for introductions. I know that whenever I attend one of these, it's always helpful to know who's speaking so I know how much credibility to put into to what's being said. So I'm John Bikes, president of the Berwyn Group. I've been president of the Berwyn Group for the last 8 years. I'm the guy that you either do or don't want to sit next to at a cocktail reception because I've been involved in death data on the internet in some way, shape, or form for the past 25 years. So prior to the Berwyn Group, I helped start a company called Legacy.com, which is the online provider of obituaries for most funeral homes and newspapers around the world now, and then started a business that scraped obituaries and sold them to companies like the Berwyn Group. Because I'm older or more experienced, I had a career prior to the internet, which was in the consumer packaged goods industry. I ran the Oscar Mayer hot dog brand, helped introduce DiGiorno Pizza, and then the internet happened and I was able to transition into this space for good or for bad. So that's a quick introduction for me. We'll talk about the Berwyn Group in a minute, but what I bring is category knowledge, and I'll turn it over to Justin for his introduction, and he brings specific financial industry knowledge. So Justin, if you want to take it over.
Yeah, thanks, John. I'm Justin Bierkes. I am the general manager of the financial services division within the Berwyn Group. Previous to joining here, I founded and scaled my own fintech called the Micah Group, exited in 2025, excuse me. We were a loan origination and lease origination system using AI before it was cool and before Claude and Gemini and all that. And previous to that, I was in banking, worked at some small institutions and some large ones like US Bank, Associated Bank, etc. So I've sat in these seats. I know exactly what you guys are going through around this, and saw the growing problem and thought it'd be worthwhile to hop over here. So back to you, John.
Great. Yeah, thanks, Justin. So today we'd like to talk about the death data problem. Some people might be familiar with it. Many of you might not be familiar with it. As we've entered this particular vertical, there seems to be somewhat of an awareness challenge around the death master file and or other data sources that are being used to identify decedents. So we want to just frame up what we think the issue is, and then what some alternatives to the current death data issues are. So, how should we be thinking about replacing current processes that are not delivering what they need to be delivering? And then some strategies for implementation, not only around death data, but around searching and identifying beneficiaries and updating data. So, and then we'll take Q&A. So we'll jump into the next slide. Before we get into the slides specifically, it's probably helpful to know a little bit about the Berwyn Group. So the Berwyn Group is the leader in the death audit and population management space in the United States. We have over 2,000 clients. We deal in multiple verticals, including pensions, insurance companies, third-party administrators, financial services, and healthcare. The company actually started almost 40 years ago and has obviously evolved over time. Our focus has been on death data for the last 40 years. In the last 5 years, we've evolved into more of a population management solution. We'll talk about what that means. But that's just to give you an understanding that as the largest provider of death data and death data solutions in the United States, hopefully it helps with any questions about credibility. So that's the quick background on the Berwyn Group. If we want to get to the next slide. This is the money slide for people who are not familiar with what the issue is that we're talking about. So we're talking primarily today about identifying decedents, and that used to be a really easy thing to do. There is a death master file run by the federal government. The death master file is a file states send all of the decedents from their state into the federal government. There's a file that lists everyone who's deceased, so it has names and social security numbers. It covers or used to cover about 95% of all deaths, and you could identify or use that file to identify decedents fairly quickly. So I say used to cover because that's no longer the case. The death master file still exists at the federal level, but states feed data into that federal death master file. And back in 2011, around that time period, states started to say to the federal government, listen, you're selling our data and we're not receiving any money. That's one issue. The second issue is selling that file to pretty much anyone who wants it without any restrictions. And so there's all kinds of personally identifiable information floating around out there. And even though those people are deceased, and so they don't have the same restrictions on protecting that, it still can be used for fraud. So essentially, the state said to the federal government, obviously, we're required by legislation to send you our information, but you can no longer sell our information. And that began the erosion of the Death Master file. So up until 2010, 2011, it covered 95% of all deaths, and that was available for purchase by almost anyone in the United States. Very few restrictions, didn't cost very much. In order to identify a decedent, you needed a first name, a last name, and a social security number. Very simple. In 2011, the rules changed. The state said to the federal government, you can no longer use our data. They still are required to send that data to the federal government, so that file still exists. But what is now distributed is called the limited access Death Master file. The limited access Death Master file no longer contains state records. And so state records make up the vast majority of decedent identifications. And so because state records are no longer contained in the file that's available for purchase, the death identification rate has declined from 95% down to 16%. 16%. Why is this important? This is important because if you're not aware of this, if financial institutions are not aware of this, they might have started a process years ago and set it and forget it. Said, we use the Death Master file, we should be good to cover all deaths. That used to be the case. It was the case up until 2011. If that process is still in place where it was a set it and forget it using the Death Master file, you think you're covered, a significant number of deaths are being missed now. So where it used to be 95%, now it's 16%. You can see the gap. That's a huge issue. That's why decedent identification has become a challenge across many industries. And that's why we have a business. And so in order to be able to identify decedents, it's become a much more complex process. Used to have one data source, the Death Master file, used to need a name and a social security number. That was it. You could get most everyone who was deceased. Now, in order to identify a decedent, you use the limited access Death Master file, but that's only 16% of all deaths. You need to supplement that with a number of other sources. What are those sources? Those sources are state death records. Some states sell death records, but not many of them. The primary source is now obituaries. So in order to identify decedents, you need to go gather obituaries. That's a challenge because there's no one single repository for obituaries. Newspapers have obituaries, funeral homes have obituaries, various other websites have obituaries. In order to have a comprehensive data set now, it's become a complex process. So at the Berwyn Group, we scrape over 40,000 websites every day to go grab obituary information and put it into our database and combine it with the state records and the limited access Death Master file. So you can see the complexity here. In order to identify decedents from an obituary, obituaries are an unstructured data set. They are not standardized in terms of the type of data that needs to be included. So you might have a name and it might say John Bicus and it might give my age and say I passed away and that's it. Or you might have my name and my age and my life story and my relatives and where I've lived. So there's a big challenge in identifying decedents because of the number of data sources and because of the type of data that is now required. So you don't only need a name and a social security number now. Now, in order to identify a decedent, you need a name, social security number, birth, location or address, beneficiaries or relatives. You need all of that information because over 80% of all death identification is now coming from obituaries. So huge issue has arisen since 2011 with regard to decedent identification. A lot of times people aren't aware of this issue because it was a process that was a set it and forget it process. And now because it's a difficult process, most people don't have, or most companies don't have the resources, the technology. This is a very niche business, this industry, to either want to invest or have to invest in trying to identify decedents. And that's where we come in. We scrape obituaries, put it together with other data sets, use algorithms. Most importantly, we also use human intervention or human experts to identify decedents because algorithms are not good enough to capture every death. Again, because we're talking about unstructured data sources that don't have the same amount of data, you need humans to review a number of these deaths. And so that's what Berwyn has. We'll talk about today. We have the leading death identification solution, which is called CertaDeath, which identifies 98% of all deaths in a population with an accuracy of a false positive rate of 0.5%. So we've invested millions of dollars in this system, in our process, and what we do. Niche industry. That's why we're the biggest in this particular category, and hopefully that explains why this has become very difficult. The other solution that people often use, by the way, it could be a credit header. So from one of the big credit bureaus, we've done analysis of the credit bureau flags, and because they're often using the death master file supplemented by maybe some call-ins or some other source of information, the number or percentage of deaths that most credit header files will return is about 19%. So whether you're using the limited access death master file or a credit bureau header file, you're going to have a significant gap between the number of decedents and between the number of decedents that you can identify and the number of decedents that actually happened. So with that said, I'm going to turn over to Justin. Hopefully that explains what the real issue and challenge is here, is that we've got to change processes from the limited access death master file to something more comprehensive, and that's what we'll talk about today.
Thanks, John. So what does that mean, right? We just uncovered the problem, something you don't really think about that often. What does that cost to an institution, a credit union, a bank? Well, first you have fraud, right? In this day and age, AI is huge. We could do a whole webinar just around synthetic ID fraud. Somebody's passed away, they get their name, social security number taken, they'll go open an account, a credit card, something like that. That's on everybody's top of mind. Another set of fraud is internal actor. There's whole another game with this. I was doing some research. The biggest one I found within the last year was out of New York State. A customer service rep had identified 2 decedent accounts, 2 people who had passed away on 2 different accounts, and misappropriated $165,000, right? So that's a loss directly to the bank. It wasn't because some external bad actor, that was an internal process control issue. So we can spend a whole another hour just talking about the fraud use case around this. Another big one, which is often underutilized, is the compliance exposure. So right now, in this administration, some of that is lifted a little bit. That could change. It most likely might change. It might go from from a federal organization to a state attorney general. And so some of the rules might be lightened for a little bit, and there's a lot of ambiguity there. But the big thing is this is a growing issue, and regulators and everybody around this is saying the way it's been done can't be the way that it's going to continue. So you have a massive achievement process for the states. Right now, that balance for the United States sits around $70 billion. It's adding anywhere from 4 to 5 billion from financial institutions alone. So this isn't just a small issue. This is a balance sheet issue. So it's pretty massive, and it's only going to get larger. And the third would be the operational burden. John touched on this a little bit. You have this process that might have been set 10, 15 years ago. You might have had turnover in the back office. Could be BSA owning a part of it. Could be the front lines, customer service rep, a branch manager. It could be an algorithm flagging some of these things. And the way that technology is moving and the speed at which generational change is happening from the greatest generation to the boomers is pretty massive. So right now, on average, the math says per 1,000 individuals, roughly in your institution, you should have right around 9 deaths or so. So if you have 10,000 members, you can do the math. So that's one of the more interesting pieces. In the more people that are going to be becoming older over the age of 65, this is going to be a bigger issue. So now you have a manual, probably a paper process, people heavy, multiple departments, and that FTE cost is significant. You want to do the next slide, Diana? So we have a poll for you here. Currently, how does your current credit union verify a member's death? Give a minute here.
Like the responses are rolling in pretty quickly. So I'm going to count us back from 5 seconds here, and then I'll close it out and share the results. So 5, 4, 3, 2, and 1. Let me share these.
Perfect. So it looks about almost 40% use a combination of death notification entry and other data sources. 16% uses the limited death master file, and about a third is family or state notifications, and looks like 13% don't have a formal process. So that's pretty standard across the industry, whether you're a big credit union or you're a small credit union. That's something that everybody struggles with. If you want to move to the next slide, Diana. So what does that look like? So right now, and why does this matter? So we have 67 million baby boomers coming of age right now, 65 and older. The largest wealth transfer that's ever going to happen in the United States, over $83 trillion, is expected to transfer between baby boomers and their children or grandchildren. And roughly 10,000 boomers turn 65 every day. So if we go back to the math and we say roughly right now 3.1 to 3.3 million people pass away on an annualized basis, what does that mean for us? How do we become more proactive and less reactive around this, right? If you're following along and you're relying on the death master file, John explained earlier, you're missing roughly 84% of the deaths. If you're using a D&E, which is a death notification entry, that typically only comes to your institution if they have a Social Security benefit, disability, or Social Security coming into that account. So it might not be something that you get flagged on and see right away. That's also going to lag. So depending on when the death gets put into the file and the Social Security sees that, it could be 30 days, it could be 45 days. It's a ticking time bomb in a lot of ways. If you're looking for your traditional process where you're waiting for the estate or a family member, an executor of the account to come in, that can be even harder. Rarely are you guys going to be the first person that executor or next of kin is going to contact. The average American, depending on the source, has anywhere from 3 to 5 different accounts. So not all at the same institution. So they might understand that, hey, grandma or grandpa, they had an account at, say, Wells Fargo. They didn't realize they had an auto loan from a credit union and a checking account there. And it's really hard to find all those places because the records are typically pretty bad. If you're using some of the other sources, whether it's an algorithm, using AI to scrape some stuff and have some probability on account activity, that also can be really hard with the emergence of auto payments, direct deposit. So a lot of those flags might not get tagged right away. Obviously, this SSA has the gaps. Another one is joint accounts. So you might have a spouse that passes away or a joint account holder, and that account's still being used by the other individual or other individuals. So what looks like normal transactions can actually mask or hide that one of those owners has passed. And the biggest piece that I think is one of the hardest things is because the process is so fragmented, there's no single owner within an organization. And that's really, really hard. There's no single source of truth. So as we look into like, what's the answer? You have your current process, and then a modern approach would be a better data set. So one of the solutions we offer, John mentioned earlier, was Certideath. Because we're monitoring all those sources, we can let you know on a daily or weekly basis if somebody had passed. So you can flag those accounts instantly. You could do batch processing, which I think a lot of institutions do, whether on a biannual basis or a monthly basis. That's typically going to be better than waiting for somebody to walk in your door. And again, the percentage of actual deaths that are found, you can call them false positives. You can say there's a gap if it's just the death master file and you're 16%, or a D&E might only, with the death master file, might get you to 30, maybe 40%, depending on the data that you're using. There's still quite a few deaths that you're missing. And this is not a very fun topic to normally talk about either. So just know that there is a better process and there's better data sources out there than what has typically been the gold standard. do you want to move into the next slide, Diana? And I'll turn it back over to John to go over some of the
Yeah.
solutions.
No, thanks, Justin. So we tried to, things already. Let's lay out what the challenge is here, which is decedent identification and how it's changed over time. Talk about the applications might be within a credit union, and then also the future holds and why it might be important. And that's where the great wealth transfer comes in. The implications of not identifying a decedent are going to, to get greater and greater over time, given the demographic profile of those who currently hold the wealth. And so, what do our solutions offer? So again, the Berwyn Group is the leader in doing this and has been for decades. There are two solutions that we offer, and the intent is to have a more comprehensive solution and a more proactive solution versus waiting for something or someone to tell you. And so the two solutions, and we'll talk about the differences here. One is a continuous monitoring solution, and we call that solution our Certideath solution. The Certideath solution is our gold standard when it comes to decedent identification. It identifies 98% of decedents within a population. As importantly, an accuracy rate of 99.9%. What is an accuracy rate? What is that measuring? It's measuring false positives. False positives have as bad or maybe even worse implications than not identifying a decedent. So you got to measure both of those, both coverage and accuracy rate. The way that we do this is on a continuous monitoring basis. So what happens? How does this work? For this to work appropriately, a client at the union would send us a file of credit union members that they want monitored, for example. And that file typically would include names, dates of birth, an address, and a social security number, and in some cases, if possible, relatives. So as you can see, there's a significant amount of data there that's exchanged. Again, we work with thousands and thousands of customers. We process tens of millions of records with personally identifiable information in them each month. We are SOC 2 certified. We meet every hurdle, every standard you can think of, given the types of customers that we work with. So that's just to give you a little better feel for we're not just working out of our garage. We've got a significant organization here dedicated to this category and protecting PII. So we receive a file from a credit union. We process that. That means we monitor that against all of our sources. We process that weekly and deliver results back. When we deliver results back, one of the big differences between Certideath and any other potential solution that might be out there is every death, everything that we deliver back to a customer has been validated. That means there's no work to be done on the client side. You give us a file, we run it through our process that includes algorithms, it includes human review, and we return back to you every single week. Here are the people who are deceased. And we return, if there's an obituary, you have a link to the obituary so you can validate that. We give you a date of death. If it's a state record or a federal record from the limited access death master file, you've got that identified so you know a social security number match. So we've got a very extensive solution to provide what we know is the gold standard in death monitoring, in death audit. Again, there's an exchange of PII here. We protect that PII, work with thousands of customers, deliver back to the customer. Here are all the people who are deceased. There's no work on your end. So if there are people currently doing Google searches, if there are people doing other things to try to identify decedents, you can repurpose that talent into some other things within your organization. That's one of the benefits here, in addition, obviously, to the downstream effects of identifying a decedent. That's one approach that requires exchange of information. A second approach, and this will be available in mid-July, is, if you're receiving the limited access death master file right now, you're receiving a file with 16% of all deaths. We have the capability, based on, again, the fact that we scrape 40,000 websites for obituaries and other data sources. We combine that with other types of data. We have the ability to create a death master file ourselves. And we will be launching that in mid-June. That death master file will contain 70% plus of all deaths in the U.S. It will be delivered weekly, just like the limited access death master file is. It will look like the limited death master file. So the benefit of this solution is if you're currently ingesting the limited access death master file, we have a solution that will replicate that, but will be 4 to 5 times better in terms of coverage. The other benefit of this approach is you're not exchanging PII. So you're not sending us any information. You're essentially just receiving a file like you would the limited access death master file. Those are the plus sides. The downside is the coverage rate is not going to be as good as our gold standard. So it's going to be in the 70% plus range versus a 98% range. So people need to figure out what the trade-off is in terms of, okay, much better coverage probably than solutions are being used today, no exchange of PII, versus do I want full coverage and some exchange of PI, which is fully protected. So those are the solutions that we offer. Different price points, different reasons for doing them, but we want to point out that, as the leader in this space, we do have solutions for customers, or clients, depending on their comfort level with exchange of PI and what they're trying to accomplish. Certideath is the gold standard, 98% with a false positive rate of 0.1%. The Berwyn Death Master File is a replacement for the limited access Death Master File. Little less coverage than our gold standard, but no exchange of PII, and can be ingested into your system the same way likely the limited access to the Death Master File is. So that's just to lay out what some options are for you to consider if you're looking for a different approach than what you're doing right now.
Awesome. Thanks, John. So what does it look like to integrate? John mentioned this a little bit as far as like the amount of work that you guys are doing, or people on your teams in the back office. You have the Google searches, somebody's coming into a branch saying, hey, my partner, my spouse, my grandfather, somebody from my family has passed away. What do I do? It's not a clean process, right? That takes time from your front end and retail staff. You have some back office operations. You'll get compliance involved, BSA, AML. If there's lending involved, it could be a new underwriting for a credit card, an auto loan, a home equity loan. You get legal involved. All that is cost. It's kind of baked in. So this isn't something that we can just come into an organization and say, hey, this costs you $7. We can make some assumptions and what it actually is costing you today, which we'll get into in a minute. But integrating this data in gives one source of truth to your whole team, right? So you have the ability to say, in this case, Justin Bierkus passed away. Here's the obituary. We can flag those accounts within days. And then you skip out on a lot of the fraud activity that potentially could happen and some of that operational cost too of Googling or searching this stuff up. So that's one of the great pieces that we have and services that we offer. What is the actual cost of these things to a credit union from just an employee expense? On average, we made an assumption that it's roughly between $400 and $600 for a really simplified case. That was something that I'd come over with and had. I recently talked with a credit union out of California. They're about 20 billion in assets. They have 1.1 million members. They're dealing with between 9 and 10,000 deaths annually. They figure, not the fraud expense, not any fines or anything else, but just from an FTE, back office staff, that they're spending about $7 million right now just dealing with deaths, and it's only going to increase. So that's research, that's waiting, that's putting flags on accounts, it's moving paper between one department and another. And this is something that's typically just not broken down in your P&L. The other piece of this too is just beneficiary location, right? You got to spend some time, you get return mail. Maybe they don't have a payable on death. Maybe you don't notice it right away, and it has to be cheated to the state. All of that kind of fits into that whole kind of death and mortality piece. It's really expensive to mail something out and get something kicked back, and we don't have the staff, we don't have the ability to go and locate somebody. So it's really hard to be proactive on these, and a lot of times those assets then get escheated to the state. And with the movement of compliance, which we touched on earlier, a lot of times it used to be the current process was good enough. Now, based on all the conversations and everything we're hearing, it's what are you doing proactively? How do you know if you can find out? How can you flag this sooner? How can you reduce your risk? And the gold standard's moving to somewhere between 30 and 45 days based on the conversations that we're having with regulators, from an average of 90 to 100 plus days. So the sooner you know, the less scrutiny you have and the better processes you have. You don't have to monitor on a daily basis, but you can't do it every 6 months. You want to go to the next slide, Diana? So currently, what's the biggest challenge your credit union faces related to mortality data? Is it just a delayed notification? You're not sure when it is. You think it's unauthorized activity or fraud when a member passes away, whether internal or external. Locating beneficiaries, just the compliance and regulatory obligations through the achievement process, or is it just a really manual process?
And it looks like everyone's jumping in to answer this. And so everyone knows you can select more than one. If you have dueling issues here, feel free to select everything that's relevant for you. And I will do the same thing, count us back from 5 here and then share the results. So 5, 4, 3, 2, and 1. And there's the results.
So almost half of you say the biggest thing is the delayed notification about a member's death. 1 in 5 say it's fraud. About 40% difficult locating beneficiaries. About a fifth say compliance and achievement obligations, and 41% say it's time consuming and very manual. So this is very, very common. You're in the same boat as everything else. So what does it look like for us to have some strategies on how do we make this improvement? Well, first, do something. Some practical strategies are, if nothing changes, nothing changes. It's typical banker mindset. As a recovering banker, I feel that way a lot too. There has to be a better way. So if you're moving from a reactive standpoint, maybe moving from having somebody coming into the branch to doing something more proactive, maybe you start using the death notification entry more actively, maybe you use limited death master file, to making some step that way. If you move into the D&E alone and you want to move a little bit faster, you move into augmenting some of the pieces that you have. Maybe it's including a vendor like us and saying how we can improve your process to become maybe a monthly or quarterly batching of some of those pieces. And if you want to move into the leading piece with start death, then you're going to be proactive the whole way, and you'll know within a couple days. So again, how the continuous death monitoring works or CERTA death, we notify you once a week or once a day when somebody passes away. You're able to alert that, and within your core system, you can integrate those directly into your current processes. You're able to put the freezes, flag accounts. We show you the actual obituary, kind of the death record of that, so there's no more guessing around that. So if you're thinking that, hey, this is a joint account, we're not sure, this normally wouldn't trigger any flags that we have currently, we just got a death notification entry on a joint account, is this really it? We're gonna have to, open up a case file in the back office and figure this out. We can give you with up to 99.5% certainty that Justin Burgess has passed away, for instance. John, do you want to speak a little bit more to that, please?
Yeah. So, as Justin mentioned, the key here really is how do you become more proactive? And we see this across all of the channels we work within. Typically, having a decedent identified is a reactive process. Reactive things happen as a result of the identification. The challenge is, how do you turn that identification process from reactive into proactive? And so, as Justin mentioned, it's important no matter who you use, whether it's us or any other type of vendor out there, that this is a continuous process. Not identifying one death or a couple of deaths and letting it go for 6 months, the implications of that can add up very quickly. And so, we typically will run weekly. We do have clients who will run monthly or quarterly. And depending on the population size, maybe you run it once a year, but that's depending on what the population type is and the size and the implications of not identifying a decedent. So there are various reasons for doing different timeframes. Our perspective is the more frequently you can do this, the better it's going to be, because a lot of times there are unknown implications of not identifying a decedent. So that would be, I think, the biggest takeaway from what we've seen across all of the industries working is once a death happens, reactive processes happen. So we're not talking about those reactive processes. We're talking about how do you take the decedent identification from being reactive to proactive. So instead of having someone walk in and tell you what's okay, my dad or my mom or my grandparents passed away, how do you know that ahead of time? And by the way, that can really help. I equate credit unions to the pension world, where you really take care of your members, you're worried about them, you're concerned. You have a different relationship oftentimes than a financial institution does. And so knowing what's happened before someone comes in and tells you can really strengthen that relationship. We see that on the pension side. Instead of a pension having made an overpayment and having to go, claw that back, instead they know that ahead of time and they can reach out to the family and say, sorry for your loss, build a relationship. Here's the benefit you're due. Same thing, you're due. Same thing applies, I think, in the credit union world, which is an opportunity to really continue to build that relationship with the family members of the person who is deceased. So I think becoming more proactive has a number of downstream or positive effects here. Want to go to the next slide? Yeah. There are other things to be thinking about in this world. We and other people offer death audit. That's one component, but there are other things that come into play once in order to help a death audit be more effective, and also to take advantage of or to leverage what's happened with the death audit to make sure that you're maximizing the value of knowing that decedent occurred. And so one of the things we point out here are identifying beneficiaries. So oftentimes what we hear or see in the verticals that we work within, whether it's financial institutions or insurance companies or pension plans, someone's filled out a form maybe years and years ago about who the beneficiary is. And that form was either left blank, or that line was left blank, or it was filled in with someone who is no longer a beneficiary because they passed, or the family relationship has changed. So we oftentimes see that not knowing who a beneficiary is the case after someone passes away. There are services that we offer and other people offer as well to identify a beneficiary. So having a beneficiary updated. So again, once that death has happened and you know about it, the downstream things that need to occur can occur more quickly. It also can occur in a more positive light. So if you know the beneficiary and you know someone's passed away, you can reach out to them. You can make sure that this is a seamless process for whatever financial transactions need to happen. So knowing beneficiaries, we think, is a really important part of this. Also, from a compliance standpoint, listen, there are a lot of things going on around from a regulatory standpoint in industries with regard to missing participants or not having beneficiaries updated, just not having a complete data set. And so, death audit is one component, but really making sure that all of the data for in this case, a credit union participant is updated. That means not only beneficiaries, there's also things that need to happen with regard to, do you have updated addresses so you can communicate with them? Maybe a little bit less of an issue with credit unions because you might be communicating more frequently with account statements or something like that. But do you have the right social security number? So you don't have a social security number that's been transposed and is floating across your system. Do you have beneficiaries locate? Do you have the right name? Like oftentimes we'll see names not be correct. And so when you have the wrong name, or you're using someone's name has changed, their last name, or they're using a different name for their first name, you can't identify an obituary. So making sure all your data is clean is something that we offer and other services offer. And I'd suggest that these are important elements of making sure that your population is managed, making sure the data is clean for all your participants, making sure your beneficiaries are identified, and obviously making sure that there's some kind of process in place to identify when a death has occurred so the downstream effects can happen. Justin, I don't know if you have anything else to add on this one.
No, I think that's great. I think there's certainly a lot of places to start, right? And if we want to move to the next slide, it's just how confident are you in your ability to detect and act on a member death within, say, 30 days? Are you very confident, somewhat, not really confident, or you have no idea?
Right, we have people jumping in and responding once again, and I'm going to give it a few seconds here because the responses are rolling in quickly on this one. Looks like we've got almost everyone, so I'm going to count us back from 5, 4, 3, 2, and 1.
Perfect. So 4% say you're very confident. 41 say somewhat. There are gaps. About 50% not very confident, and 7% haven't even looked at this yet, which is not uncommon. I would encourage you guys and gals to, if anything, just go back and say, how are we identifying a deceased member today? Like, how do we know? And what does that process look like, right? Map that out within your organization. It could be from a D&E notification through SSA. It could be a flag that's been pulled from BSA or AML, somebody in the back operations. It could be, hey, this is the process when a family member or an executive of estate walks into the branch and starts talking with a CSR or a teller. I think it's an important thing for you all to figure out within your own organization. Next would be to understand what's the average lag time? How often do we find out about a death internally versus when that death actually happened? And how do we measure that? Because that window is very, very important. That's where a lot of the fraud lies, right? And so if it's a couple days, that's awesome. If it's a couple weeks, that's not so great. If it's we don't know and it's half a year, sometimes years, and it gets sheeted to the state, then there's definitely a lot of room for improvement there. And one of the things to ask yourself along those same lines is how many accounts did we have to sheet to the state last year? And how does that compare within our peer group? You know, did we have any audit fee accruals or interest or any FCRA, Fair Credit Reporting Act, on accounts that were on confirmed deaths? And maybe the most important question you could ask is, who owns this process end to end within our organization? Is it branch? Is it back office? Is it the BSA compliance? Most often I've noticed that it's nobody. It's no single individual. It's a hodgepodge of backroom operations and old processes and an SOP somewhere. So next slide, Diana, if you would. So if anything from today, hopefully we've shown you that current practices with the delayed reporting and just all the gaps within the current sources that most institutions, credit unions use, create a significant risk because the data is fragmented, the processes is fragmented, and this is going to be a growing issue, right? As the population ages and increases, more and more people, unfortunately, are going to pass away. And so this is only going to become a bigger issue in the coming years. Second, when you use validated multi-source data, you go from 16% up to our gold standard of 99%. And the timing goes from months, potentially years, down to days. And what does that deliver? Better operations, less cost, and a lot less risk and fraud potential within your organization, right? And again, I mentioned this earlier, we could talk and have a whole webinar just around the fraud aspect of this, whether it's internal actors within your organization that are misusing accounts, or if it's external actors taking a decedent's name, social security number, opening up a new account or a loan or a line of credit, and using AI to generate a synthetic ID, and you're none the wiser because you don't know. When you check those credit bureau headers, they're typically in name and social match or mismatch only. So it's very, very common, and it's only becoming a bigger issue. So that's all I have. I don't know, John, if you want to.
Yeah, real quickly, and nice job summarizing there, Justin. Again, our intent here is to point out that there's an issue and with decedent identification. And oftentimes when people ask what I do, and I tell them, first of all, look at me sideways because it's a little bit unique. But then secondly, they're like, yeah, that must not be that hard, right? Just use some data and some AI and put it together. It's like, no, it's way harder than that, and we can show you how. And so this has become a very complicated thing to do. And we see the challenge not only in financial institutions. Again, we work across multiple verticals. And so, at a category level, what I'd ask you to think about is what processes, and we saw some of that in the poll results, are you using, and should you revisit those because they might have been a set it and forget it, or maybe they're just not as comprehensive as you'd like them to be. As you evaluate potential options out there, listen, asserted death is, without making too big of a product pitch, is the gold standard in the industry for death audit. I'm older, so I do the Coke versus Pepsi challenge. We've never lost the challenge. There are other options out there. I would say if you're evaluating options, again, evaluate for coverage or coverage of your deaths. What percent of your deaths will people cover? What's the false positive rate look like? How much work do you have to do once you get results? All other solutions out there, even some we offer outside of asserted death, are probabilistic matches, which means, listen, I'm going to give you a 90% likelihood the person's dead, a 70%, a 40%, and then I'm going to give that back to you, and you're going to have to figure that out. That's interesting maybe in some cases, but the way I think about that is if I went to the doctor and they were looking at my heart and they said, okay, there's a 90% chance you have a heart attack, you know, a 70% chance you ate something, and a 40% chance there's nothing wrong with you. If I went to one doctor and then I went and got a second opinion, and the second opinion said, hey, you had a heart attack, I'm probably going to listen to the guy who actually is 100% certain. And so that's how I think about probabilistic versus, you know, validated matching, but something to think about. What fits your organization the best? And then, you know, if you are looking at organizations or solutions for death audit, what types of processes do they have to enrich your data to make sure they're capturing everything? Because most identification comes from obituaries, and you're not going to always have the data from the customer. So are you grabbing it from somewhere else? Do you have human validation to help? So there are a number of things that just go into this category to make sure that you have the best solution you want. And again, if you think about this holistically, all the downstream implications of identifying or not identifying a decedent, whether it's, as Justin talked about, potential fraud, which we could talk a long time about, escheatment to the state, the potential to strengthen your relationship with credit union members because you're not being reactive, you're being proactive. A lot of things come into play here that have both, you know, positive financial implications as well as hidden positive financial implications. So this we think is a really important category. It's a niche business. It's unique to talk about. But we want to bring everyone's attention to this so you are thinking about it, because it will continue to become an issue as this great wealth transfer and the demographic profile of customers with that wealth continues to evolve and, in fact, get older. So with that said, I'd love to hear if there are any questions and answers, or questions at least, and maybe we can provide some answers here.
Excellent. Thank you both. We do have a few questions that were submitted. I'm going to consolidate some of these thoughts into some key questions that I think answer a couple different things. The first one we have, and Justin, I'd probably put this to you, is how quickly can a credit union expect to see improvements in fraud detection after implementing like a better death data solution?
Well, I think there's two parts to that question. I think right away, honestly, you'll notice from a cleanup standpoint of the members within your organization, if you currently, we'll just use round numbers and basic math. So if you have, let's say, 25,000 members in your organization now, you are processing, just on basic math, it could be a little higher, a little bit lower, but that would be about 230 deaths annually. So about one a day, a business day. So if you're not doing that currently, there's a significant gap you can overcome. From the fraud aspect, you know, there's more than just somebody opening a synthetic ID, popping in, opening your credit card or checking account. There's account takeover. There's just fraudulent activity on account when somebody passes and the auto payments are coming through, or, you know, a child or somebody else is using that account to pay maybe for legitimate purposes, part of the death, you know, might buy a casket or so forth. That's also in that same bucket. So depending on how many members you have in the actual deaths, it's hard to give an actual dollar amount, but it's meaningful. Average fraud loss for an account is somewhere between $3,000 and $8,000 if it's non-malicious. It can be significantly higher if there's lending involved, and that's on top of your FTE cost of just dealing with a death.
Thank you. And I think another question that dovetails with that one, are smaller credit unions at the same risk from these gaps as larger institutions? Does institution size matter in terms of, you know, risk for this stuff?
I would say, yeah. Obviously, if you're in a more populated area or within a large city, obviously the propensity is higher. But anytime you have the ability to open something digitally online, apply for a loan, open a checking account, get a money market, or if somebody realizes that somebody's passed in your area that lives there, there's the account takeover piece of it. You're a target. And a lot of times fraudsters will target smaller institutions knowing that their process probably hasn't been updated. They assume we're in a small town or a small area. There might be, you know, 4,000 or 5,000 people in our town, or we might be a trade union, credit union for pipe fitters or something. And so they're assuming that you're lax on that because you know your customers, right? And you know your members really well, which you might, but you'd be surprised how many bankers I talk to, both on the traditional bank side and on the credit union side, that didn't know. And when I was in banking too, somebody goes south for the winter. We're up in Minnesota. Somebody goes to Arizona or South Carolina or Florida. They pass away there. We don't know for 6 months, but we're their primary account. And that ACH is coming through all those pieces, and we had no idea. So it's a big risk.
Oh, thank you for that perspective. And I think, John, one for you, we had a question kind of around what happens when data sources conflict. Like if one source shows a member is deceased, a different source might show something else. Like, what is that process like?
Yeah, so great question, and we run into that, and that's why having multi-source identification is really important here. You know, we think of the federal government data oftentimes as a gold standard, so let's use that as an example. If you receive the limited access death master file, there is a false positive rate in that death master file that's higher than our false positive rate. Again, because oftentimes numbers are transposed. There's a process where somebody missed something. It's a process, and it's all just data. And so there's a higher false positive rate than there is on, let's say, our SIR death because we've got human intervention. This is all we focus on, et cetera. So multi-source identification is really important. So you've got a social security number and a match there. That oftentimes is considered the gold standard, even though there is a false positive right there. That's considered the gold standard because that triggers a bunch of things on the federal side with regard to benefits that get cut off, for example, or stopped. And so that's a gold standard. But then if you have, if you have obituaries that come in, and oftentimes, the average person has between 3 and 5 death notifications, and that could just be a death notice initially that evolves into an obituary. It could be an obituary that's placed in multiple sources. So there are a number of things that come into play. Obituaries are they're not a gold standard because they don't have a social security number, but oftentimes they have a date of death that's more accurate than the date of death might be in like the limited access death master file. So there's a little bit of an art here, but the science is if you can have multiple sources of identification, which we do, to be able to line those up and say, okay, listen, we've got an obituary we've got 3 or 4 obituaries for this person. They've got the same date of death. They've got all these other variables that are the same. And we've got one from the limited access death master file or a state record that's got this outlier. Oftentimes, we'll go with the gold standard, but we also will make a note that, listen, there's a discrepancy here in date of death, so you might want to check that. So what I would say the takeaway here is it's as much an art as a science. That's why we have a business, because we use that art and science. But having multi-source identification is really important, and that's what we use in all of our solutions.
Fantastic. I think, John, also to you would be we have a question sort of around how we handle member privacy and data compliance when processing information. Is there like a data governance framework, or what does that look like on Berwyn's end?
Yeah, so we have extensive data governance. We have a WISTIC profile that shows all of our data security. We have a SOC 2. Again, to put in perspective what Berwyn does, think of the largest insurance companies, the largest pension plans, some very large financial institutions, healthcare systems. We work with all of them, and if you think about those types of institutions and the type of what you have to jump through, the hoops you have to jump through to get a contract done on the data security side, hopefully that gives you a little bit more comfort with us. But if that's not enough comfort, we have a whole site set up that details our data security, our SOC 2 report, everything else that we go through, pen testing, all those things. So protecting PII is obviously a key for us. We hash everything. Everything's encrypted. Everyone has their own encryption. All of our customers have their own encryption. So we have a very extensive system put in place to protect PII because obviously it's crucial to the success of our business. And obviously protecting our customers' data is crucial to their current and future success of our business.
Fantastic. We have one last question. I know we're kind of just a few minutes left. Around are Berwyn solutions able to integrate with existing systems or loan origination platforms? What are some of those integration options? So Justin, I don't know if you feel comfortable speaking to
Yeah.
that, and then maybe John could add some color too.
Yeah. It's kind of choose your own adventure. So we have some where it's batch transfer, right? So you can pull some stuff out of your core, whatever system that is, and securely transfer that over. Some of it is, through a secure file transfer portal where you put stuff to us and then we give you just an output. So there's no two-way exchange. We do have an API that's coming out here very, very shortly here, Q3. So that'll be able to integrate in to different systems that you have, whether it's a loan origination system, it could be a deposit origination system, it could be to your core, whether that's at Fiserv or Jack Henry or what have you. So you could even go super old school if you wanted to, which I would not suggest doing, which is download your stuff into an Excel file and just email it over. We don't really like that, but that could be another option too.
Great. Well, I think those are all the questions that we had. Thank you both so much. Those are great answers, and it was super helpful to have you both on to answer some of those for both.
Of course.
Yeah, so thank you both. And thank you to everyone that joined today. John, Justin, do you have any final thoughts before we log off here or anything else?
Yeah, I'll turn it over to Justin for closing. But again, we think this is an important topic. It's one that people don't think about. That's why we're here. The approach has changed dramatically because of what's happened with the limited access death master file. So no matter who you use, hopefully we've given you some information to think about, whether it's looking internally at your processes or looking for a partner like the Berwyn Group to help you. Hopefully we shed some light on that, and happy to answer any questions on follow-up after this if you have our contact information. And Justin, I'll turn it over to you for closing remarks.
Yeah, I just thank you everybody for their time here today. I would just really encourage you. There's always a lot of initiatives, right? You have the regulatory burden that's coming. You have maybe a core transfer. You have all these different uh, agendas within the organization. And this is something that's only going to continue to grow, and it's not fun or sexy to talk about. But doing something is way better than doing nothing because it's already costing you something. You don't even know what that is. And I don't know personally. We have some ideas, and it's very, very expensive, and it's only going to get worse. So we encourage you to take a small step forward. If that means talking to us, using a one-time data cleanse to go through your portfolio, if it's even just figuring out, hey, what does our process look like when this happens? How do we know when we know? So you can start putting your arms around it. That's a great place to start.